Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO Founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul speaks with Roger Nanney, Vice Chairman of Deloitte LLP and the National Managing Leader of Deloitte Growth Enterprise Services, about the results of their recent survey of middle market C-level executives.
So, I guess the good news is, well, there's a lot of good news in the latest report. It sounds as if things are going well. It sounds like people's confidence is finally sort of set in, and as the report puts it, the spigots are open. Actually, I'm not quite sure that's the exact phrase, but the throttle is open. It sounds good. What do you think?
Well, you're right. The report, we sort of thought about it and decided to actually sort of use that title, Opening the Throttle, because we've not only seen the highest level of confidence in the economy from these executives since we started the survey back in 2011, but maybe even more importantly, we see a lot more action in terms of steps companies are taking to sort of begin to take advantage of this optimism, both in terms of growing their businesses and investing for the future. So it's one of these reports, Paul. It's really nice to be able to talk about it because of the levels of confidence and what that means for the economy, given the strength and size of the mid-market relative to the importance of their businesses to overall results of GDP and the like.
So, in terms of the numbers are really, really impressive. In terms of the optimism of middle market leaders, the 35% believing the U.S. economy is going to expand by 3.5% or more. It's really remarkable. I mean, there's a lot of good news, sort of in the headlines these days. And particularly with respect to the middle market, I mean, what do you attribute that to in terms of the change and sort of the upside change that you've seen from past reports?
Well, it's interesting to sort of speculate about what makes these executives so confident. I would point to a couple of things. One is, we have seen over the last few surveys an increasing level of optimism, and I think these executives, because they run their businesses, they're close to the market, they have the size of a company that has to be pretty agile in terms of responding to challenges, and so they're action oriented. And when you look at the levels of uncertainty that we continue to have in the economy, have had in the economy, I think they've become accustomed to being agile. We saw it actually in this survey, where in the last several months since our last survey, over half are reporting higher revenues, almost half are reporting higher profits, they're reporting higher capital investments, they're reporting higher levels of productivity. Those all are significant increases in the number of respondents that report those kinds of metrics. So I think part of it is they're seeing the results of their of their actions, and therefore that's causing them to be more optimistic and more aggressive in trying to grow their businesses.
It's one of the things that really jumped out at me, and that sort of is confirmation of a lot of other data points out there, was that 94% of middle market growth in the last year has been domestic. And that sort of dovetails with a lot of the things we're hearing. I mean, in fact, just this week, I think the last couple of days, the World Bank came out and made basically said that global growth is, they're reducing their global growth numbers, and this is just one of many data points. And the U.S. seems to be the sole bright spot. The emerging markets, or quote unquote emerging markets. I've never quite understood how China can be an emerging market, but it is what it is. And various, the various other regions, Europe, of course, seem to be pretty dour frankly, in terms of their outlook, whereas the U.S. is the one bright spot that's going to sort of drive things, which is reflected in your numbers here. Do you think that's a long-term, well, long-term is probably too broad a thing, but maybe an intermediate term, do you think that's going to last for a while?
It is interesting. I think we can expect from the mid-market a continued focus on the U.S. That is pretty clear when you read through the surveys and when you sort of look at the trends of the surveys over the last several years. However, having said that, one of the things that you see in the survey as well with these mid-market executives is they do tend to look at the global environment and global economy as an opportunity. And you're right, 94% responded that their growth is coming from the U.S. But they do continue to talk about. In fact, there's a case study in the current survey that talks about mid-market companies specifically. While they are getting growth in the U.S., they're patient and they are making selected investments around the world to take advantage of those emerging economies in places where the middle class is emerging as a strong player. Having said that, the survey also talks about challenges. It's a great environment. It's actually nice to see some confirmation of some of what we heard in the Deloitte survey around expectations of GDP. I think we saw we're above trend in the last report at about 3.5%, and as well though, when you look at the way these executives responded on challenges, the challenges in Europe and global growth also were highlighted as in terms of concerns about uncertainty. Those were challenges that they really isolated in on as being one of the chief concerns. So, a long way of answering your question, I think that the U.S. does appear to be a bright spot, and mid-market companies here in the U.S. tend to focus as a priority on that market. So that means good things going forward for these businesses. It is nice to see the U.S. economy picking up. We've been sort of in a slow growth mode over the last several years coming out of 2008. While the economy's been in a recovery, it's been half the rate of previous recoveries, and to have this sort of spark come through, and again, more importantly for me, to be able to provide some insights through our survey back to the mid-market, I think hopefully will help mid-market executives better assess their own situations and make choices about where their investments are. We're not without our challenges. I think when you look at the responses in the survey, while things like healthcare and the regulatory environment have been challenges in the past, and they continue to be, but the respondents sort of see those as receding a bit, and what's emerging is more of this skills gap in the talent arena and keeping up with technology and the advantages you can gain when you sort of make the right investments at the right time with these newer technology platforms, taking advantage of the cloud and data analytics and other enabling kinds of applications that help you from an operating perspective, improve your productivity. Those are, important investments, but there are challenges in terms of being able to make sure you both can get the right talent and time your investments in the right way.
Yeah, boy, I tell you, the talent issue just keeps coming up, and it's becoming more and more pronounced to pretty much everyone I speak to. And to be very honest with you, it worries me more than any of the other things. 'Cause so many of the other things can be rectified, reasonably, in a reasonably efficient way. The talent gap is becoming a real problem because that's the kind of thing you don't necessarily turn around on a dime. You can change a regulatory environment pretty quickly. You can change a taxation structure pretty quickly, just with a new regime. You can buy a new technology or implement a new technology pretty quickly. But golly, you don't train people or get people to the skill level that you need them to be overnight. and that just seems to be this constant refrain. And as people begin to expand their workforce, that's going to become a bigger and bigger issue. And I know the report addresses this pretty significantly. I mean, what in your experience, in your talking to folks, what are the most successful areas that people are using to fix that problem or to address that problem, I guess is the better word?
Well, it was maybe my biggest takeaway from the survey when you think about what the mid-market is facing when it comes to talent. And I really, again, it may be optimistic on my part, but it sort of appeared to me that these mid-market executives are taking matters into their own hands when it comes to addressing the skills gap. As an example, the highest response around how are you dealing with your talent issues was that they're bringing in-house training to the top of the list. So they are addressing the skills shortage by, hiring workers that might not be qualified for the jobs that they need, but they're putting their investments around training to, develop not only qualified employees, but developing leaders for the future. We had a Deloitte Business Confidence Report that came out recently as well, and those executives responded that, their companies were not prepared, from a leadership perspective, and they were, dealing with, putting training in place and becoming more consistent in the way they develop leadership. So in-house training is an action that's being taken. They're also, looking at partnerships with universities and other educational institutions, and again, sort of taking, that investment dollar and trying to identify and develop talent, people that have the right attitudes and the right levels of commitment and high levels of integrity. Those become the attributes that you look for as opposed to, a qualified skill set. And it's interesting because, the one metric that is maybe the most stubborn for us right now to improve upon is the labor participation rate, which is, continues to be, at an all-time low in terms of, the numbers of qualified workers that actually are, in the workforce, which is, again, another example, I think, of why you've got to try to address that by dealing with training and looking at the ways you recruit and get the sort of talent that you need and the kinds of work-life programs that you put in place to help keep those people, as part of your organization.
Yeah, that's kind of the sleeping serpent, isn't it? That labor participation, people don't talk about that very much. Everyone looks at the headline unemployment rate, but the unemployment rate doesn't really mean much, or at least not as much, when you're thinking about the continuing decline of the participation rate. It's really extraordinary. Yeah, I mean it's certainly an ongoing challenge. Okay, let me be devil's advocate now for a minute because it's such an upbeat report. but there are some things that, and I guess maybe let me ask you this question first. The time frame of talking to folks for this was sort of the fall of 2014, right? Am I right about that?
That's right. Yeah, it was in October.
I don't recall if that was, where I'm going with this is the oil price, the price of energy, which has, as everyone knows, sort of collapsed recently, which is a fantastic boon to manufacturing certainly, and to most other elements of the economy. I think that was probably just beginning in the fall, right? I honestly can't remember now that I think about it. Do you think
it was? No, I was just going to say it was subsequent to the survey.
Okay, yeah, which is interesting on a couple of points because it suggests that the optimism that the middle market executives are showing when it was really not driven by the incredible benefits that come from lower energy costs. Because one of the obstacles noted in the report was the increase in but over half thought there was going to be an increase in commodity prices, for instance. Now that's lower than it had been, but
right.
Still it was it's still a pretty hefty number. And golly, when oil basically cuts in half at the barrel level, that's quite a jolt and quite a nice thing for your costs. So do you think that's going to have any major or going to spur any major changes in optimism going forward? Do you think that's a key element going forward in terms of middle market companies, or is that going to be sort of a blip in the radar and everyone thinks it's going to go back to where it was?
One of the things I'm not is a projection or a futurist around energy prices, and if I was, we probably wouldn't be talking today. But I do think that there's a couple of ways you think about this. The energy sector is such an important part of our economy, as well as the mid-market, frankly, that there will be some impact to those businesses that will be more negative. But you're right. I think declining energy prices not only provide advantages to companies that like the manufacturing sector in terms of pricing, but it also helps to keep inflation low. It maybe makes it a little more difficult around the Fed dealing with raising interest rates. And so in an environment where you have low interest rates and you have inflation under control, then and economic growth is in place, then I think it's likely that the mid-market will continue to benefit along with other sectors of the economy.
Sure.
But it's also, I think, interesting and important to point out that this commodity sort of cycle that we're in with energy prices is just another example of the uncertainties that can happen that you just don't expect. And that's why I think you see in the survey that these executives always have in the last several. They rate uncertainty as continuing to be very high in the economy. We've dealt with budget issues, government shutdowns, the European debt crisis, even the weather, in the early part of this year having a real impact on these businesses. And so they have in the energy prices and how you address those and the way you operate your business is another one of those uncertainties. I think the important point is it hasn't dampened the confidence they have, and they're continuing to take actions to grow their businesses and be agile in addressing things like pricing that either help to improve or give them opportunities to take advantage of the market.
Well, and you mentioned easy money there, and that obviously, you didn't say easy money, I did, low interest rates. Mm-hmm. That the convergence of that, and of course the private equity, the money sitting on the private equity side, plus the strategic cash sitting on corporate balance sheets, at long last seems to have converged into a very, very attractive M&A market. And that seems to come through pretty strongly in the report. Do you see that continuing? Do you think we're at the crest of that right now, or do you think that's really just beginning? Because there's an awful lot of folks on the sidelines right now, even now, given all those factors. What are your thoughts on looking forward with the M&A market for the middle market, based on the survey and based on your own sort of anecdotal evidence?
If you sort of look at the way the executives positioned this whole area of M&A and IPOs, it would certainly suggest that the trend will continue and this market will continue to be pretty rich in terms of transactions. And I have to say, as I'm out visiting clients and spending time around the country, I would say that my experiences would confirm what we see in the survey. And there are really some very interesting improvements in the responses. I mean, when you have almost half of your executives say that it's likely or very likely that they would purchase another company in the coming year. That's up, almost 20% from just 6 months ago. And, maybe even more interesting is this is not a group, the mid-market generally, that tends to look at the public markets as being their first choice when it comes to, accessing capital. And we saw in this last survey that 28% of these executives said that, it's likely or, highly possible that they would access the public markets. A year ago that was 4%. Just 6 months ago it was 8%, and in this last survey 18% in the spring, and now it's jumped to 28%. 18%. I've got my percentages off of that, but it went from 4 to 8 to 18 in terms of access to the IPO or public market. So I do think that the M&A markets are going to continue to be pretty fertile ground for the mid-market in the next 12 to 24 months. Maybe just to reemphasize the point that, the most ringing, insight coming out of the report was just this continued level of optimism. So we're pleased at Deloitte to be able to now have sort of these trends coming out that show, hopefully, that there are real opportunities going forward for mid-market businesses to continue to invest for growth, and that there are a number of ways that you can access those opportunities, whether it be looking at the capital markets, looking at partners through an M&A transaction, or just expanding your businesses in the U.S. and globally by investing organically in technologies and in the ways you address your talent. So, all positive right now with some challenges out there. I think we're positioned for a continued nice result in this space, and we're happy to be able to produce hopefully some insights that allow mid-market executives to better assess their situations and take the right action.
Be sure to check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.